Welcome everyone to Vested Interests. This is Shane, and can you believe it? We have rolled through another month. 2022 is flying by. Say goodbye to June and on into July we go. 4th of July coming up. Hope you all have a very awesome 4th of July weekend. Go watch some fireworks. Enjoy company with family and friends. Going to have some people over to my house to do just that. Before we jump into the video, I would like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who have subscribed to the channel. I really do appreciate that. It keeps the channel growing, and if you could, guys, consider subscribing to the channel if you haven't done so already, and hit that notification bell, and definitely drop a comment down below. Let me know what you think of the video. It does help the YouTube algorithms if you guys comment and subscribe to the channel and like the video. That really helps as well. It helps a small YouTube channel like mine grow and reach more people. And we definitely want to get the word out that the way to financial freedom is to buy assets. I prefer dividend growth, and I'm assuming you do too. That's why you come to watch the videos. Dividend growth paying stocks. I also don't mind real estate. Right now I think it's overpriced, so hopefully things continue to decrease in price as they seem to be currently, and maybe next year or possibly into the middle of next year we'll start looking at real estate again. But right now we're here to talk about some dividend stocks, some stocks that are near 52-week lows, and some stocks that I've been adding some this past month, and these are what I'm going to focus on adding to the portfolio over the coming months, so long as they stay down in fair value or below market value, what we consider to be a buy range. So let's take a look at these 6 stocks. Again, we're going to look at 3M. I've been adding to that one. Intel as well, been adding there, but they're so low. I just feel that they're such a value. I'm going to keep on adding. Prudential, LyondellBasell, Union Pacific, and Apple. The big dog Apple has finally dropped in price close enough. We picked up some shares later in this past month, about 20 shares. I'd love to continue to add if it continues to drop. Let's take a look at why we are looking at these. So as you can see, we will start with 3M. This is in the industrial sector, and as you can see, over the last 6 months, right, a high of somewhere in the mid 180s. 52-week range says it reached $203.21 at the high. Must have been somewhere beyond this, not in the last 6 months anyway. And the low of $127.30. So it currently sits, this is at the close of business on June 30th, so day before the 1st of July, was at $129.41. Just above the 52-week range, and heck, I would love it if it even kept on coming down and made a all new 52-week range. I'll follow it all the way down to the bottom, keep on buying. I don't think 3M is going anywhere. They have moved into India as well. They are an international brand. They've made it through recessions in the past, and right now, as you can see here, their dividend yield is 4.59%. Love that. And they have a PE ratio of 13.47%. So I feel they are fairly valued currently. Yahoo Finance has a 1-year estimate target of $153.28, and I'm not really as concerned with that as I am this nice dividend yield, the PE where it currently sits, and like I said, close to that 52-week low. Like, I'd love for it to keep on going and this PE to drop and this to set a new all-time 52-week low. But even if it didn't at this range, I added 2 more shares today. I'll cover that video on Sunday, so check that out for a portfolio update. That's why you want to subscribe to the channel and hit the notification bell, because I do pump out some videos covering what I'm doing throughout the week on Sundays as well, and a dividend stock pick of the day throughout the week. So 3M is one that I did pick up throughout this week, and I'll continue to add as long as it stays pulled back in these fair value ranges. Next up on our list, again, another one I've been adding considerable amounts to. I'm over 160 shares here currently, and I'm going to continue to add to Intel as well. Another one I really like. It was actually up on the day here to end the month, but over the last 6 months, as you can see, a nice, it might have rallied a few times here and there. There another little rally, but definitely overall a steady decline in Intel. They are building a new factory in Ohio, so I love that they're bringing back manufacturing to the States, going to be pumping out chips in Ohio, and there definitely is an issue with the chips. That's part of the reason we can get a lot of these stocks, these chip companies, on sale right now. There is an issue with chips, but I believe that's going to increase future demand as these issues with the shipping industry, COVID over in China, as these things all get sorted out. they will start pumping these out, and we will infill the balance, the missing balance currently in chips in all the products that need them. So I think this is actually a good tailwind in the future for Intel next year and beyond. So I'm going to take advantage of what I consider fair value, even maybe below fair value currently. Again, 52-week range as low as $36.60, as high as $57.46. Another one right above that 52-week low, and again, not one that I would mind at all. If it broke through and set an all new 52-week low, I'd keep adding and decrease my cost per share, increase my yield and future returns. That's the idea, folks. That's what we're looking for. It does have a PE extremely low, a 6.21. A 1-year target estimate of $51.27. So again, Yahoo Finance is where I pick up this information from. So they see that there is potentially some upside here over the next year as well. Number 3 on our list, Prudential Financial. Financial sector is another one I've been adding to. Prudential, I picked up a couple more shares today as well, and this is one that I will look to add to in July if it continues to stay at these prices or below. So currently at the close of business, again, June 30th, ticker PRU, Prudential Financial, $95.68. 52-week range has been as low as $90.25, as high as $124. Creeping down close to that 52-week low, $95.68 is definitely closer to $90.25 than it is to the $124 high. And again, as you can see over the last 6 months, up and down, but overall it has been a decline. It does have a PE ratio of 7.70. Again, for financial sector, you really want to go in and look at their financials. Go over here to Yahoo Finance, click on financials, and look at their price to book. Right? So that's one of the areas you want to look at. For financials, its price to book is more important than the PE ratio. It does have a forward dividend of $4.80, which is a 4.98% dividend yield. So a very nice dividend yield here. A 1-year estimate target, not extremely much higher than where it is right now, but it is a higher target, $109.50. So it does speak to some upside appreciation. Prudential is one I'm going to add to, like I said, if it stays here or below. Next up on our list, LyondellBasell Industries. We added 2 more shares today of this one, and again in July, if it stays pulled back, this is definitely below my cost basis per share, so I'm going to continue to add at these levels. I feel this is probably one of the most undervalued stocks that we're going to cover today. Its 52-week range as low as $83.50, as high as $117.22. That is LyondellBasell Industries, ticker LYB. This is in the materials sector. Close of business on June 30th, $87.46. So definitely closer to that low over the last 52 weeks than the high of 117. Has a PE of 4.97. I mean, come on, that's just extremely low. And then it has a dividend, $4.76 paid out over the year, pays out quarterly. So you get 4 payments, divide that by 4, and a yield of 5.4%. That is beautiful. I love that yield. That's why I'm adding it to my portfolio. It helps juice up that yield a little bit in a nice company that has paid a growing dividend for quite a while. So they've been around and seen downturns as well. LyondellBasell is the next one. Let's keep on going. Union Pacific Corporation. Who likes the railroads, right? Back to the old monopoly day. Go take a ride on the Reading Railroad. Well, in this case, we're going to look at Union Pacific. Union Pacific is in the industrial sector, ticker UNP. At the close of business on June 30th, last day of the month, $213.28, 52-week range, $195.68 for a low, $278 for a high. Another one, as you can see, it did shoot up over the last 6 months, but then boom, came right back down. Like to see this a little bit lower than where it currently sits. I would actually like to see it set a new or get back down to this 195 52-week range, the low. Another one, I wouldn't mind seeing it even drop down into the low 190s, high 180s. Set a new 52-week low, and then I would bet I've got about 3 shares here. These ones, I know more expensive ones are hard to add a significant amount to, and that's why I really watch these ones and wait for them to pull back. Definitely like it better at the 200 or below range, but currently it is right there at my cost per share basis. So if it stays below that or drops below that, I'm going to look to add probably not a ton of shares, but maybe 3-4 shares over the month. Definitely a couple if it's below my cost basis there. I do like Union Pacific. I like the railroads. I like the growing dividend. They actually just increased their dividend here recently. This one is on the higher end for the PE, is on the 20.27, but it seems to me Union Pacific, anytime I look at them, they always seem to be trading at a premium, and that's part of the reason I'd like it to drop back down a little bit lower towards this 195. That would drop this PE ratio down. It has a nice dividend of $5.20 paid out on the year, which amounts to a 2.44% dividend yield currently. And again, if it dropped down lower, that would increase this yield. That's what we're looking for. And Yahoo Finance has a one-year target estimate for $264.52. That's Union Pacific in the, like I said, industrial sector, a railroad company. If you don't have anything in the railroad sector, this might be one to look at. I'm going to be watching this one for July, and like I said, if it stays down in this range or lower, I'll probably be adding a few shares to the portfolio. And last but certainly not least, it is the big dog, Apple. I just started a position in this company in my portfolio this last month. My daughters had it in theirs a little bit higher. I picked it up for them in the month before. Whenever it dropped into the 140s, I waited for they have much longer horizon than I do, so I actually waited for it to hit the 130 mark. So I picked this up on the last dip. It's dropped a little bit more down in the 130 range. I would love to get this below 120. That's why I was comfortable picking up into 130. My idea here is that I will continue to ride this if it goes lower, and I will add to my position again, hopefully in the 120 and lower range is where I'd like to add. So I am watching this one to see if it pulls back. If it drops to 130 and hits my cost basis, I might add a few shares. But if it drops to 120 or lower, I would probably back up and drop a couple $1,000s into this, maybe pick up another 10 to 20 shares over the month. We'll see where it's at. These ranges, I might add 1 or 2 shares here and there. Might add a little bit to my daughter's custodial accounts. It reminds me, if you don't have a custodial account for your kids, maybe consider buying one. Time is everyone's friend when it comes to investing, so even small amounts for your children now, they have 20, 30 years of investing. You put in a few $100s a month or even a few $100s a year, it'll turn into thousands later. And then when they get my age, 40, 50, 60, and they start contributing, hopefully earlier than that in their 20s and 30s, and they start contributing, that snowball will grow so much faster. So again, not pushing any products on you, but if you don't have a custodial account for your kids, I would definitely consider opening one. It's money well spent. Anyway, let's get back to the video. So 52-week range, a low of $129.04. Excuse me. Like I said, I picked it up at 130, so right above its 52-week low. It's currently at $136.72. Talking about Apple, ticker AAPL. This is in the information technology sector, and 129 is definitely closer to that low than the $182.94 high that it hit. Another one you can kind of see here over the last 6 months, but definitely been volatile. You can see the volatility in the market in this stock, for example, down, then back up, then down again, back up, down again, back up, down. Currently up a little, but I think we're still in a bull market. So, or I'm sorry, in a bear market. So I think we're going to be in a bear market for at least the remainder of this year, probably well into next year. For some stocks, specifically the higher ones that were like Apple, reached these 180s. They probably had no business being up there, but now they're pulling back into fair value. PE ratio 22.23, still a little high, but Apple's another one that always seems to have a high PE. A lot of people interested, so they push this price up. I believe I looked at Buffett's 13F, and he was buying it in the 140 ranges, so he must feel that this is pretty good value right here. I would love to see his next 13F and see if he's added any more. I don't know that he will. Apple's already over half of his position, so he does have a big stake in Apple, but he did recently in Q1 add some in the 140 range, so he may add at these ranges, especially if it drops to the 130 or 120s. That's where I'm looking to add. 130 or lower, really love it in the 120s is where I'm looking for it. It does have a dividend yield. It is on the low side, but this is a fast-growing company, so you get growth in the price appreciation, plus the dividend growth will hopefully grow significantly over time. I was a little disappointed in their last dividend raise. They have a lot of free cash flow, but I don't know if they're going to do some acquisitions or something as some of these other companies become depressed. They may look to buy out some companies during this downturn as well. That's some companies do that often. When there's a downturn, they'll buy out other businesses and prop themselves up. And then I believe they're also investing a significant amount in the their new headset, the virtual reality headset, and then also the Apple Car. So trying to get into the car business. They have their hands in a lot of things, obviously Apple products, as well as the Apple Pay apps. So they are a big conglomerate, like a 2.213 trillion. They're a huge company. Again, 22.23 PE ratio, a forward dividend of 92 cents. So again, relatively small dividend, 0.67%. Another reason I'd love for it to drop back into the 120s, that would get this closer to 1%. This is lower dividend yield than the overall market, so not a huge dividend yield here. This is really for future growth, future dividends as they grow the dividend over time. They do have a 1-year target of $186.73. All right, folks, that's what I am looking at for July. Again, I hope you have a happy 4th of July. I am going to be putting out a update for my portfolio that will probably come out on Sunday the 3rd. And this one I'm probably gonna, I don't usually post 2 videos a day. I did make 2 videos today on the 30th. I may post this evening. What time is it? It's already 8 o'clock. I want to get this out before the market opens on July 1st, the first trading day of the month. So I may post this tonight. If you see it, great. If you don't, it will come out in the morning on July 1st before the market. So hope you guys have a great weekend. Appreciate you viewing the video. And like I said, help me out. Drop a comment down below. Like the videos. It really does help out the channel. It helps out the YouTube algorithm. Spread the word. Let's get these out there. Let's get people pushing to financial freedom. Get out of the rat race. Invest in yourself. Invest in your future. Buy assets. I love to buy them in growing stocks that pay dividends. And that is the name of the game, so that we can all reach financial independence and hopefully retire early. That is the plan. As always, I appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think. I do personally read and respond to all the comments. I'm always interested to read your questions, opinions, or suggestions for future videos. Drop those down below as well. Constructive criticism is welcome. Just keep it clean. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time, guys. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in an investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.